What's up, guys? Bang, bang, lunch money time. While Wall Street's trying to get rich, the rest of us just trying to get our lunch money right. I'm here with nobody, but I have Polina on the line. It's a remote recording. Namaste in the background. What's up? Don't forget that is now the sponsor of Lunch Money. Lunch Money. It does not get ads interrupted by Polina. Go ahead. What were you going to say? We'll wait.
I forgot.
Okay. BlockFi is now the sponsor of Lunch Money. You can buy and sell crypto on their crypto exchange. You can deposit crypto and take out a US dollar loan against your crypto collateral, or you can use my favorite product. I'm an investor. I sit on the board and I use the product, which is their interest-bearing account where you can earn up to 8.6% APY in that interest-bearing account. Go get an account today, BlockFi.com/Pomp. Do it. Be cool like me. BlockFi.com/Pomp. All right, what's up?
All right. U.S. stocks fell sharply on Wednesday following their European counterparts as investors worry that the latest increase in coronavirus infections could halt the global economic recovery. The Dow Jones Industrial Average dropped 823 points or 3%. The S&P 500 dipped 2.9%, and the NASDAQ Composite traded 3% lower. Yikes.
Who cares about day-to-day stock movements? 1% here, 2% here, 3% here. Who cares? Everyone's always speculating on some nonsense. I get it. There's people who are trying to day trade and do all this stuff. The best investors in the world buy assets, hold them for long periods of time. Day-to-day price fluctuations don't matter. But it's very funny to me to see that everyone thinks that all of a sudden, as cases are going up, that we're going to have this global shutdown because hospitalizations are not going up nearly as much from what I've seen. So could it be more testing? Maybe. Could it be something else? Maybe. Could it be the fact that we're starting to reopen places? Maybe. I think that there's a lot of data flying around and there's not a lot of confidence in what is happening. And therefore, as I've been saying since March, it's really, really hard to make good decisions with bad data. What do you think, Miss Polina?
Yeah, I mean, I think that investors are emotional, and this is what happens when things happen in the world. There's an election coming up, huh?
Emotional investors?
Emotional. Control your emotions.
Facts.
Okay.
Them all how to do this. All right, what's next?
You know how yesterday we were talking about contactless payments? Well, so today, Visa Europe CEO Charlotte Hogg said that the COVID-19 pandemic has sped up the shift to contactless payments in e-commerce. She said the coronavirus hasn't killed cash, but there has been a real shift to digital. You can see real evidence of changes in behavior. Just more proof that this is the future.
Yeah, ain't nobody want to be touching nothing.
No.
Right? And if you can just walk in and do it real quick, of course. And also, I think that it's going to be more secure. It's going to be more efficient. It's going to cost less. Like, there's all this kind of stuff that'll happen from it.
It's interesting that a lot of these companies have been trying to go digital and contactless for so long, but they haven't been able to change like user behavior. But now with COVID, like people are forced to do it. So it's kind of weirdly in favor of that for those companies.
COVID is just accelerating all the trends, right? Yeah. We've talked about this for months now, but definitely. All right, next.
Okay. So Goldman Sachs wants to help any company in the world become a bank. The firm has just released software that allows clients to embed banking services onto their own products as part of a push to break into the $32 billion a year industry managing cash for big corporations. What?
It's pretty smart.
Wait, Idea Bank?
I didn't read read this one. Surprisingly, I didn't see it on the internet. But if you are Goldman, you have basically two things. You can be a gold miner, so you can go look for the gold, or you can sell the picks and the shovels. And obviously being the platform or selling the picks and the shovels to everybody else and let them go use the product, and you just take a small piece of it, that's a very profitable, scalable model. So this is super smart if they can get people to adopt it. Can they get developers to use it? Can they get people who are building various web or mobile products? Sure, I could easily see this being adopted. Because also there's like the financialization of everything, right? You're getting more and more people who are saying, hey, I want to participate in some way in kind of banking services. And so now here's somebody selling picks and shovels and should be pretty profitable.
So two things on this. I used to think a long time ago that picks and shovels were pigs and shovels. And I was like, I get the shovel part, but where does the pig come in? Yeah. And two, I think it's interesting that Goldman is kind of acting like a tech company, right? It's allowing other people to build on top of its software.
They're all realizing that the tech model is way better.
Yeah.
Even the media companies are realizing that.
Okay.
But that's for another time.
All right.
That
So,
was telling me not to say what I want to say. Go ahead.
wait, what?
Go ahead.
No, you can say whatever you want to say. Namaste.
Mainstream media companies are competing with tech companies, and tech companies should look at them as competitors and not as simply people who tell their story anymore. And I think that tech companies should look at the media companies and try to take them down. If you're going to compete, you can't complain then when you get beat.
Okay.
Ooh, that rhymed a little bit.
There's a whole issue with freedom of speech and stuff that you're promoting kind of something else and dangerous, but okay.
No. Hold on. Just so we're clear. My whole point is no one's endangering your freedom of speech. But if all of a sudden tomorrow, Facebook and Twitter said, hey, the New York Times now claims that they're a tech company, they're a competitor, just like Apple won't allow certain services to use their platform, or just like Facebook won't give their social graph to social media competitors, all Facebook would have to say is, you know what? We're not going to allow you to share New York Times articles anymore on our platform. It's a competitor.
Can I ask you something?
Of course.
Where do you get your news?
I get it all over the internet.
Okay, but you read articles, right?
Of course.
Because here's the problem with people who are like, oh, just let them talk. And, you can, like on Twitter, like you can share your own view and somebody else can share their own view. And that's freedom of speech. Yes. But a lot of times, regular people, they don't understand that this person comes with biases. They have to read more to understand, like, are they lying? Is this the truth? Is this whatever? Media plays a really important role in that.
I'm not disagreeing on the media side. I think that the New York Times should hire more journalists and they should do more journalists, like keep doubling and tripling down on what they're good at. But the second that you say you're a tech company and you are going to now go compete, why should Facebook and Twitter give you free distribution? Why is the New York Times not paying for that distribution? They're competing with them. They're using the services that Facebook built for it. So if all of a sudden Facebook said, hey, we're big fans of free speech. Go do your free speech wherever you want, but build your own distribution platform. Stop using ours. There's no right that any media company has to the platforms. And that's what's happening. That's why there is such an anti-tech bias, is because what you're seeing is the mainstream media companies are now stepping in and they're all claiming, I mean, you can just Google New York Times tech company, Washington Post tech company. They're all claiming to be tech companies now. So, okay, well, why would anybody say to their competitor, hey, I'm going to help you be successful? That doesn't make a lot of sense.
I know, but Facebook kind of thrives off of news organizations posting their articles on there, because otherwise what news would people share? It would only be photos and statuses.
Again, there would be a pro and con or risk reward analysis that would have to be done. What is the impact if we don't allow them to do this? And is that good or bad for our business? But my point is that there's just this assumption that mainstream media companies across both sides and the independent. So this is not a Republican thing, a Democratic thing, or an independent thing. Just all mainstream corporate type media companies. There's an assumption that they have a God-given right to distribution on social media platforms.
Yeah, I agree. Okay. Speaking of tech companies,
you agree?
The CEOs of Facebook, Google, and Twitter returned virtually to Congress today to defend their legal liability shield to lawmakers keen to weaken it. As we speak, the hearing is going on. The executives face lawmakers on the Senate Commerce Committee. Members unanimously supported the hearing after its scope was expanded to include discussions of digital privacy and tech's impact on local media.
So now I'm going to argue the counter argument to what I just argued, which is if Facebook, Twitter, et cetera, decided that they were going to start selectively preventing certain types of outlets from gaining distribution to their platform, there would be incredible regulatory pressure and lots of questions around antitrust and anti-competitive behavior. Because again, my point in all of this is that there is a competition. The New York Times, Washington Post, and whoever else, Wall Street Journal, et cetera, they are competing with Facebook. They are competing with Twitter, right? And so when you look at it from that perspective, you have to start to wonder, where is the line? And I think that that's the reason why the social media companies haven't done something like this, is because the regulatory pressure would be incredible on antitrust and anti-competitive behavior.
What I find interesting in these hearings is that there's Republicans and Democrats, and somehow each side sees themselves as the victims of these big tech companies. So, for instance, Republicans have complained that the legal shield allows tech companies to get away with removing messages they disagree with, particularly those from conservatives. Democrats, on the other hand, fear that tech platforms have not done enough to police their platforms, and that Section 230 allows them to get away with not taking appropriate action. So it's kind of like they're in like this like weird middle.
I think that the hardest part about all of this, and it goes back to the competition, debate. And I'm presenting two very polarizing, different perspectives on purpose, because I don't think that there's a single answer, right? Like I see both sides of the argument, and I think that being able to describe both arguments is important, because really you start to get into the details of, are tech companies editorializing the content you see? Right. So like if I make a phone call to you, we've talked about this before. If I make a phone call to Polina and the phone company said, nope, you know what? You're talking about donuts. We don't like donuts. So we're going to
Zoom.
or Zoom or whatever. If they said, oh, we don't like what's going on in that conversation, we're going to shut off the call. Now you're starting to editorialize. You're providing some level of censorship depending on the content. But the phone company says, we don't care what you talk about. We're never going to shut it down. All we are communication pipes, and we don't actually make decisions based on the content. What we're starting to see on the social media platforms is that's what they used to say. But when they have a ranked algorithm, now they are making decisions. They're promoting some things. They're depressing some things. Now they're even going as far as saying they're going to fact check information, right? It's a big divergence from just, hey, we're the phone company, to now there's more editorial stuff. And so I think that what you're starting to see is all these lines are blurring. And that's why I say they're all becoming a competition, right? So like I would argue in some cases that many major media companies, they've built social networks. They may not have a single platform, but what is the comment section? What is all of the memberships that they have?
Well, it was a lot of, and it was a lot of things kind of coming at once, because in the same period of time where a ton of media organizations said, oh, the comment section is really bad and toxic, we're just going to shut it down, people didn't stop having conversations and commenting. They just moved to other mediums. And that also came at the same time with the rise of social media. So those conversations that were normally taking place underneath the articles are now taking place on Facebook.
Yeah, I think the big thing, and before everyone freaks out, the big thing here is you're probably not going to find two bigger proponents of free speech than Polina and I, in terms of, one, we should encourage as much free speech, even the people you disagree with.
Especially the people you disagree with.
Absolutely. Two, the mainstream media is actually important. They provide a check on power and all these things. There is a very important role for journalism in our society. Three is that there is a confusion about what is a right and what is a nice thing to have. So distribution, for example, on a social media platform is not a guaranteed thing, whereas I think that there's many people who believe that it is. That's the third thing. The fourth thing is where we are headed is a world where we don't want to go. We do not want the social media companies editorializing things, deciding what gets promoted, what doesn't. Like this world that we're headed to is a very, very dangerous, slippery slope place. And I think it's an important conversation to have right now before you head down that way, because ultimately we're going there. I can't stop it. Polina can't stop it. Nobody can stop it. We're going there. But I do think that it's important for people as they're consuming content to remember the content I'm seeing may not be the full story. I should take the personal responsibility to educate myself, and I should go look at what is the other side of this argument. So if somebody's telling me that, COVID's not bad, it doesn't kill people, I should go figure out what's the other side saying about why is it killing so many people, right?
Well, and it's not always like one side versus the other side. It's like, look at all the facts and try to make an independent decision. What scares me is that the path we're going down is a lot of people find speech that is uncomfortable to them. It's not necessarily inciting violence or anything like that. It's just uncomfortable to hear. And they are trying to suppress that speech, and that is very dangerous. I read this horrific survey that they did where they surveyed college students, and there was a significant percentage of college students that said that they would support a certain level of violence to suppress certain types of speech, and that's really terrifying. Okay.
Disagree. Hard disagree. Okay, next.
Okay, so you know the Whoop Band, the fitness tracking company?
Yes. Whoop whoop.
It monitors vital movements, sleep, workouts, all sorts of stuff. It's very popular right now. It just closed $100 million in funding, which values it at $1.2 billion. Shout out to Joe Pompliano, who wrote about it this morning. His newsletter is huddleup.substack.com. And the funding, the round of investors include a bunch of athletes. Patrick Mahomes, Rory McIlroy, Justin Thomas, Kevin Durant, Larry Fitzgerald.
Who Larry Fitzgerald is?
Huh? No.
Yeah, he's a golfer.
A golfer?
Yeah, you know.
No, it says he's a wide receiver.
Yeah, that's golf.
That's not. I know that.
Plays in the NFL. It's cool. It basically measures all your vitals. It tells you if you need to sleep, if you need to recover, what you're doing, why it's working or not working.
How is it different from the Apple Watch?
It's basically all the health functions of the Apple Watch on steroids. So it like goes deeper and like it's a specifically built thing just for that. You can't make phone calls on it or do anything crazy.
Do we know why this trend is accelerating of people wanting more and more data about their vitals?
Yeah, I mean, it's the quantified self, right? Everyone wants the data because they want to change their behavior. So they want to sleep more, they want to eat better, they want to get more exercise, like all these different things. And now that the data is available to people in a consumer-friendly way, they're interested in getting it. So the quantified self is just a trend that is increasing, right?
Yeah. Okay. Final topic. 2 years worth of e-commerce growth is about to be packed into one holiday season as Americans turn in droves to online shopping to avoid crowded stores and malls during the coronavirus pandemic. So this is really interesting because every year, there's Black Friday, there's like the last minute mall, Christmas present shoppers. They're going to be forced to do it online this year.
Well, you have lots of practice online shopping.
Oh, there's 2 packages for you downstairs. Okay, go on.
Why don't you describe what you think is going to happen in the e-commerce world? I personally don't have that much experience with e-commerce, but you, on the other hand, are an expert.
Well, I've been in e-commerce long before, this happened, COVID happened, but I just don't because of COVID, all these things where you're packed in a store like Black Friday will be canceled. So I think this is good for some of these companies that have been trying to go online, these retailers. Brick and mortar costs a lot of money, et cetera, et cetera. So let's try this new thing. It says people are expected that so Adobe expects consumers could spend an extra $11 billion online, pushing total holiday spending past $200 billion. It's wild. That's 33% growth year over year.
Crazy. What joke you got for me?
Okay, so I don't have a joke, but I have a funny story.
Okay.
I did not tell you that I was going to do this, but I'm going to do it. So guys, wait, did I already tell them this story about the Mexican restaurant?
No, but you have 2 minutes, so hurry up, 120 seconds.
So we went to a Mexican restaurant and we were having dinner, and I ordered a chimichanga. I really feel like I already told the story. I ordered a chimichanga and had half of it left, and then Anthony goes, just leave the rest for Jimmy. And I was like, who the hell is Jimmy? And then you said,
Jimmy Changa, duh. It's like Louis Vuitton. Louis from Jersey City and Jimmy from Mexico City. They hang out together. I thought Jimmy Changa was like some billionaire somewhere because he came up with Jimmy Changas.
Jimmy Changa, ladies and gentlemen.
Jimmy Changa.
And Louboutin is what he was trying to say, Louis Vuitton.
Yeah, Louis Vuitton from Jersey City with the shoes. Jimmy Changa from Mexico City with the Jimmy Changas.
Jimmy Changas. Okay,
I found out that Jimmy Changa is not a guy and that is not a thing. But that's fine. We'll see you guys tomorrow.
Bang, bang. Hope you guys enjoyed this episode of Lunch Money as much as we did.
And don't forget, Lunch Money is now sponsored by BlockFi.
So go check them out. There's a link in the description that you can click on. I'm an investor, a user, and a huge fan. What?
You're a bigger fan of BlockFi than you are of me?
BlockFi is my second favorite thing in the world behind Polina. They've got 3 products. They can give you a US dollar loan. You can earn up to 8.6% interest on an interest-bearing account, or you can buy and sell cryptocurrencies on their crypto exchange. I personally use the interest-bearing account. There's not very many places where you'll find up to 8.6% interest on a deposit in an interest-bearing account. Go do your own research. There's risk associated, but 8.6% is pretty compelling. So click on the link in the description. Say thanks to the folks at BlockFi. Subscribe to our channel. Like the video. Annoy Polina in the comments. And we'll see you guys tomorrow.
And be kind to your friends.